Welcome to the FinTech Times News and Views podcast. Established in 2016, the FinTech Times is a global multimedia news outlet centered around the world's first leading FinTech newspaper. We report on the latest and brightest ideas from the FinTech world. Follow the conversation using hashtag TFD News and Views and follow us at the FinTech Times.
Hi, my name is Mark Walker. I'm the editorial director of the FinTech Times, and today I'm speaking with Kelvin from Audax. Perhaps, Kelvin, you could start off by giving us a little bit of an intro to your role in the company.
Hi everyone. My name's Kelvin. I am the CEO of Audax Financial Technology. We are a integrated bank-in-the-box solution that basically sells to banks and FIs globally in terms of helping them upgrade their platforms, run new digital banking business models across retail and SME, and as well as future-proofing them for the purposes of decentralized finance, as well as hosting and running AI models. So that's what we do. And my role, obviously, as a CEO is to dream up of things to do so that the team can execute.
Some of your experience of understanding what the next digital growth frontier is actually going to be. What's the new thing that we're going to be doing with sort of these banking as a service systems?
17. Embedded finance, banking as a service was not really the official lexicon of fintech at that point in time. Over the years, I've seen it grow, and obviously now it's kind of a big thing to some extent, in that players are referencing embedded finance to be a X trillion dollar opportunity and so on and so forth. But the reality is, it's only been about 5 years, for example, where you have some level of embedded finance, some execution of it globally. The reality of the matter is not everyone has, in fact, most people haven't executed embedded finance really well. In fact, many of our clients around the world, some of whom have been announced and some who haven't, are looking at us as helping them enable their embedded finance capabilities. I think many banks will go through this journey inevitably, because all banks are solving for the same problem. While we talk about distribution, financial inclusion, and all the nice things, the reality of the matter is embedded finance allows for any banking institution to solve their biggest problem. Investors around the world are looking at banks and saying, how do you increase their return on equity? And the only way to do it from a retail and SME perspective is to acquire customers on the cheap, service them on the cheap, get returns on the balance sheet in terms of margin growth. And to do that, the way to do it is to be able to plug yourself into any ecosystem and acquire customers at scale, which I think is the primary driver behind the embedded finance business model. I mean, WeBank is a very good example in China, right? 400 million customers, you barely see them. In fact, you may be a WeBank customer and not even know it. So potentially, that's where the business impetus is for embedded finance. The next level, which I don't think most banks have thought about, is once you have a platform through which many non-banking institutions, social media, ride-hailing, or travel apps access your banking services to their end customers, the question that no one's really asking in the next 3 to 5 years is, yes, we now have access to the data of multiple ecosystems. What do we do with that? So far, in my personal experience dealing with multiple clients around the world, questions have been limited to, we can use that data for better underwriting. We can use that data for better understanding our customers. So that's a great thing. And it will drive ROE. It will build fantastic experiences for customers. What no one's really thinking about, in my mind, is the next step of that evolution, which is what happens when you have access to all that data in your own infrastructure. Aside from the stuff that we talked about, the use cases that we talked about earlier, could you not create data as a product set in and of itself? So I see banks not so much as banks evolving from being a provider of balance sheet and services to a mediator of data, if done well. They have the security, they have the trust element, they have access to data now if they run embedded finance at scale. What do you do with that position? Could you be the universal ID for specific markets where they don't have a universal ID provider? Could you be a data provider to multiple other industries like FMCG? All of those I don't think has been explored in detail. You would argue that a lot of the Chinese as well as the Korean embedded finance players run data companies. JP Morgan recently, I think in the last 6 months or so, are toying with the idea, or I think there's a POC or something has gone to say, how do I monetize my access to customer data with advertisers, for example. So those conversations are the nascent steps in this direction. So if you ask me to summarize, embedded finance is in its kind of relative infancy. We'll get to a far more mature view in the 5 years, but concurrently you will start seeing the evolution of new use cases for data as well as new business models around data over the course of the next 10 to 15 is my guess.
Really interesting. I mean, that sort of concept as banks custodians of ID. Effectively, that's kind of where I've always seen the traditional sort of financial institutions as custodians of your money. Why not move them to custodians of your data also as well? I guess and that could be an interesting sort of new direction for banks, because I wouldn't say there's a risk of them becoming obsolete, because I think they're always going to be around. But obviously with a lot of, embedded finance, non-financially regulated tech companies doing financial transactions, the role of the traditional bank is kind of becoming a little bit behind the scenes. It's almost like they're the pipes, they're running everything, but nobody really wants to see their UX, because let's face it, most of the banking UXs are not great. So do you think that could be a new revenue model for banks that would kind of bolster their balance sheets on the fact that maybe they're not doing as many transactions or not doing as many sort of payments and that type of thing?
Absolutely. And I think it's not just a revenue stream. I think it's a completely risk-weighted asset-less revenue stream, which is great from a return standpoint, from the balance sheet point of view, right? So if there is no risk-weighted asset to it, it's pure fee income, depending on how you monetize and what structure you make around the data. It is almost like free money if you know how to structure it well. Almost like free revenue. It requires a significant amount of change. It requires a change in the infrastructure of the banks, modernizing their data infrastructure, modernizing the way they stream information, modernizing their physical as well as their cloud infrastructure to scale. All of that, which is obviously ongoing in a lot of places. But more importantly, modernizing the mindsets to think of banks beyond taking your money and lending your money, which is sure great, but that's also been the limitation in terms of the return on equity story.
They've not really had the best track record in modernisation and digitalisation at the moment, have they really? We're still, in many sort of sessions that I go to at sort of Cybos and everywhere else, banks are still talking about their digital transformation journey. And a lot of them are still running their sort of COBOL black boxes as their core banking systems, and they've not really moved forward. So do you think would it be kind of a leapfrog? So instead of actually just rewriting the financial black box systems, when they redo everything, they need to reimagine themselves as a data company. And that's what you're sort of advocating, that forget about the first step of digital transformation that you're already not really doing very well at, and go straight into the data one.
Not quite. So I think when you think about the transformation, it is useful to start thinking about the data story as well and incorporate that into the transformation that most people are going on a journey on. And I think it's an inevitability that transformation will happen across the course of the next 2 decades. And the reason for this is quite simple. And to your point that some of the bank systems, some banks around the world are held together by sticky tape and COBOL, right? Couple of reasons. One, COBOL developers were still alive in the last 2 decades. Most of them are not around anymore. That's one. Two, previously, the reality of the matter is most incentive programs for senior management in banks prioritize short-term returns over long-term change, because who's going to be there for five years, right, or 10 years. So everyone is thinking about the tenure that within which they have to safeguard, the guardianship of the bank. That's changed now. I mean, the incentive structure haven't fully changed as far as I can see, but what's happened is that change needs to happen within those 5 years now. Because if it doesn't happen within those 5 years, some things are going to fall over. While it's not universal for all banks, these 5-year windows will start hitting in the next 2-3 decades across the world in different banks. So I think that change will happen. And we see that in our interactions with banks around the world, some very progressively minded clients of ours who are pushing for new business models using Audex as a platform.
Do you think there's a difference in the East versus West sort of mentality of banks in that sort of 5-year plan? Traditionally, we've seen the West being a little bit more short-term focused, as in proper short-term, like 3 months, and the East being more sort of like 3 years. Are you seeing that, or do you see that this is more of a level playing field now between each part of the world?
I think the long-term, short-term incentivization or a long-term, short-term mindset of senior executives in the regions that I've operated in, which is largely ASEAN and the Middle East, has been pretty consistent. Where nothing is falling over, or where there's no immediate pain within the next 2 years for a need for change, conversations tend to take a really long time. Whereby there is an immediate need for change because something is happening, they need to think through a new business model because there's pressure, because the platform is failing them today. That conversation accelerates very quickly. So I don't see the dichotomy between the regions as far as I can tell. But that being said, I've also not spent time looking at banks in the US or banks in Western Europe. So take my input with a pinch of salt.
So we're talking about Asia, and obviously you're based in the hub, one would say, of Asia in Singapore. How do you see sort of your role and specifically sort of Singapore's role in bringing this sort of new way of thinking to the whole of Southeast Asia?
Well, I see our role as interesting because I think we are one of the few players out there, relatively young, 2 years old as a company, as a proper independent company, with its own support structure and delivering to external banks as clients. So we've got 5 or 6 clients externally, and we are hoping to make that 8 to 10 before the end of early next year. We are young, and there are not that many players in this space at this age moving to expand the mindsets of banks around the world. So that's quite interesting. We come up against some of the incumbent players, but they've been around for 20 years, and there is some fatigue to what they're talking about. We've also done really interesting things like enable embedded finance capabilities for our core investor, Standard Chartered Bank, which I think that's public news, so I can talk about it. Doing it for some of our other clients in various parts of ASEAN. Now, as to Singapore's role specifically, firstly, as to my role specifically, I see it as, shall we say, a calling, right? A calling to try to drive change in banks around the world for them to be better, not just from this is what the bank used to be, let's just digitize everything, but let's think through what a bank really can be, which is why I keep challenging the idea that banks are data mediators, not so much balance sheet providers in the long run. That's it. From a Singapore point of view, the Singapore government, the infrastructure around the country has always been very, very favorable to fintechs, very, very favorable in driving conversations around payment hubs, around cross-border conveniences, as well as challenging banks in Singapore specifically to be at the forefront of digital innovation. DBS is a very good example, world's best digital bank, right? And as such, the concentration of talent in the country is very encouraging. Obviously, the talent is now a bit of a diaspora in a few places. A lot of countries are setting up their own fintech hubs, kind of. But Singapore has pushed the boundaries on that for the last decade, and we see a flourishing of that ecosystem in Southeast Asia. I don't imagine that Singapore will stop doing that. They will continue flourishing in various other sectors, not just in fintech, across data centers, which we've announced. I think Singapore government has announced that. Has also talked about nuclear energy, has talked about a whole bunch of things. So I think as a country, as a public policy position, as I can tell, based as a private citizen, we are very progressive and we push the boundaries of what is possible and try to lift and try to push everyone else along the way as well. And I see it as, it's not solely Singapore's contribution, but certainly, a large wagon with a lot of weights and everyone pushing. Singapore is one of the hands that are pushing it.
So does part of this modernisation programme actually look to align a little bit more of that cross-payment sort of flow or cross-border working?
Yeah. So, from my perspective, we still see that there's some fragmentation between the countries because I do have a client in Indonesia, I have a client in Malaysia. The requirements for some parts of the delivery are different because they have a different data set, they have a different rail that they run on. That being said, Southeast Asia as a whole has progressed significantly in this space, right? There's Project Nexus, I think that was announced 2 years ago, of regional interoperability with regards to payment rails. We're starting to see some of it. Private enterprise has also contributed to it significantly via the likes of Alipay acquiring all the wallets in places like Indonesia with Dana, in Malaysia with Touch 'n Go and so on, and creating interoperability between the wallets. So you can transfer money between wallets and use them in the respective countries. Or you can use a Dana wallet in Malaysia today, for example. It will be somewhat of an evolution of payments quickly enough, and I think in the next 2 years you will have full interoperability on payments. Beyond that, we don't know what the roadmap looks like, but I suspect that it will be the same very much for taking credit at some point in time.
AI. What are we going to be talking about this sort of time next year? What's 2026 going to bring for us?
I actually don't think it's AI, to be perfectly honest.
Fantastic. Me neither.
I think AI is a fantastic tool for augmenting performance, augmenting productivity. Is it ready to really do the grand things that individuals at the global stage claim that it's ready to do? Don't know. I wouldn't hazard a guess that it would be, because given that most of the revenue derived from AI globally is still from consulting firms trying to sell AI, and the fact that there was a paper recently published that talked about how some 90% of AI POCs fail in banking because POCs, being POCs, don't really function well in a truly secure production environment. Now, AI will be a game changer in terms of how we do things and how fast we can do things. I already see that with my own teams in terms of productivity. Developer productivity, marketing teams are now much leaner and running campaigns and building story decks and pre-sales books much faster than they used to. What used to take a week, it will now take a day. That being said, I actually think the real story in finance, and it's specifically finance, is one of two things. Well, one thing really. I think the evolution of stable coins as an alternative payment rail is really interesting, because if that takes off, you already see some movement there, a couple of $1 billion worth of transactions running through and settling real time. That forces a real discussion around global schemes and payment rails. I don't think it'll happen, in the next 5 years. I may be wrong. In fact, I'm wrong a lot, so take that with a pinch of salt. But certainly it will be a significant topic of conversation in 2026.
I would hasten to agree with you on that one as well. I think that's going to be a really interesting, long-running conversation as well. Kelvin, it's been amazing to speak with you. Thank you so much for spending time with me here at the FinTech Times.
No worries, Mark. Pleasure's all mine.